But then as the press conference went on, markets started to give it back quite a bit and yields picked back up along the way. One of the largest Fed decisions that we've had in quite some time. Plus, we get income, spending, and inflation data all the following day as well. So we have a lot to cover here this week. I'm Brandon Steele, financial advisor with Mainsail Financial Group here in Bellevue. And our goal is to bring to you some of the market news, data, trends we're watching every Thursday and leave you feeling more empowered after each of these updates. Again, we have a ton to cover with Fed decision, income, spending, inflation. We also had GDP estimates come out, advanced GDP estimates. We had some very big earnings stories come out this week as well, which I'll cover as the question of the week. So we'll get right into it. So first off, let's just start with the Fed decision. This was the second one under Fed Chair Warsh, just for those keeping track at home. And basically, the short version of this is that they left rates unchanged. So there was no change in rates, no up, no down. Rates stayed the same. However, there were three dissents, so three folks that voted in a different direction. What I will share is the kind of market reaction to all this, based on what we had heard and what we had seen. At first, the markets really liked it. Markets were starting to rebound quite a bit on a pretty tough day heading into the Fed decision and press conference. Yields had dropped quite a bit. But then as the press conference went on, markets started to give it back quite a bit and yields picked back up along the way as well. So basically ended the day as far as market close on kind of a sour note. But what we saw as a result of that was the yield curve got quite a bit steeper. So in other words, markets may be thinking hikes are coming, but maybe a little bit further out than expected before this meeting. Basically, what that would suggest, a steeper yield curve would suggest shorter term bonds. So think like a very short-term bond, 2-year bond, something like that. Basically, the yields are down, and then think about like a long-term bond, for instance, a 30-year treasury, for instance, where the yields are up. So basically, we saw that steepen a little bit as a result of the Fed decision and the press conference, more specifically, the press conference. The other things to cover kind of tie into what the Fed's looking at, I believe, so it's very timely. We also had advanced GDP estimates come out that shows up 1.5%, which, if this is where we land, would be lower than expectations for the quarter, so that'll be important to watch. We also had income and spending come out. Income was up 0.2%, spending up 0.3%. Income was a little bit below expectations, spending right in line, so not too much to write home about there. But then we also had inflation data come out today on Thursday. So today we had PCE inflation numbers come out, and the headline was actually down 0.1%. Now, keep in mind, this factors in food and energy, so take that with a grain of salt. But nonetheless, PCE was down 0.1%. And then core PCE, which strips those out, was up only 0.1%, which was below expectations. So I think based on what we heard from the Fed, maybe some considerations that the market we're looking at in terms of, maybe further out rate hikes, and then getting the inflation data on the back end of that, suggesting that, it's only one number. So maybe don't read too far into this, but the markets are probably looking at that saying, maybe it's less likely that we get a rate hike than they had expected just 24 hours ago. So that's kind of where things shook out for this week. Before we touch on the question of the week, which has driven markets significantly here on Thursday as well, be sure to tune in next week. We kick off jobs week. So that'll be very telling as well for kind of let's say the third leg to the stool on what the Fed's watching. But before we break, question of the week is really around earnings, and I'm going to focus really primarily around Microsoft because that's the big story here today on Thursday. Obviously, a lot of the inflation and the Fed comments and decision are probably a big factor in what we're seeing in the markets up here today on Thursday. But also, Microsoft had a pretty impressive earnings report after a very difficult 6-9 months or so. So that is, I believe, driving up markets quite a bit here today as well. A lot of that was based on huge cloud growth. But basically, I think a lot of people are believing that this AI bet that they've taken is starting to pay off. And we also heard a lot about lower capital expenditures in the quarter than what many had projected as well. So that story remains to be big. The capital expenditures, excuse me, in big tech remains to be a big story. And we've seen it before where the companies who are spending more are getting punished. In this case, company Microsoft, who spend less than expected, got rewarded as a result. But that's driving a lot up. We got chips up today. Microsoft obviously is up. And so that's kind of starting to shape the markets here a little bit, in addition to kind of the wind in the sails, so to speak, around inflation and what the Fed had shared there yesterday. So quite a bit here this week. Hopefully that helps to kind of give a quick lay of the land. Obviously, there's a lot of this stuff that is moving the markets in and of itself, and then you tie it all together, and it's really been quite a up and down week here this week to make heads or tails up. So be sure to tune in next week. Again, we do get the jobs data coming out next week, which will wrap up some of the Fed's story here for the current month with inflation, jobs, and the economy. In the meantime, have a great upcoming weekend, and we will see you next Thursday at 3.